We want to discuss another big story today. Investors can profit from, you know what? Let's continue focusing on the GM. We were going to talk about, and we will talk about, BHP and Potash. Sachin Shah is here, and he has a lot of trading ideas on special situations, and we will get to that merger, but I want to talk about the GM deal first, the IPO. And first of all, it's great to see you. Thanks for coming.
Happy Wednesday.
You have about 100 ideas all the time at any one point. I love your emails. I get them all the time. But you said people are paying attention to the GM IPO because of another deal that GM is involved in.
Yes. So GM is acquiring AmeriCredit. ACF is a ticker. And so the premise here is that as they're IPOing, people are going to be obviously reading that IPO and figuring out, well, how are they going to be able to not only finance the transaction, because they said it's going to be financed through cash on the balance sheet, but basically making sure that the deal closes. So the spread is fairly wide.
So there's some skepticism out there.
What are you looking at for the deal? The shares are at $24.11 right now.
Yes. So the deal price is $25, and so that spread, 89 cents or so, is basically what people are kind of concerned about because of the government stepping in here. What's going to happen? So the fact that the government is selling some of the shares, they're IPOing. Everything seems on track for the deal to close, which is basically at the end of the year. That's what GM has said.
It's funny, in after hours, you see the shares down a little bit. Of course, they're not probably traded like crazy after hours.
In some cases, they can be. In merger our world, yes, they can be, Matt.
So let's talk about one of the big stories, and of course, that is Potash to the possible sale of Potash to BHP. What are you seeing here?
Yeah, so Carol,
because obviously Potash, the CEO, has said, I think we're worth more, basically.
Yes. What's interesting here, and you know I love to talk about yoga, okay? And so the theme here is awareness, okay? Awareness of what the value of potash is. In addition to, what is the motive for BHP, okay? So they made a $130 offer, okay? The stock was trading 100 and change. $25 equivalent, or $7.4 billion, is not realized. So when you discount that, they're not even paying a premium. So
wait, go through that again.
Yes. So essentially, the stock was, they're saying they're paying a 20% premium, right, Carol?
Right.
And if you look at
what we've all been saying.
Exactly. And so the point is that when you listen and you look at the presentation from Potash yesterday, which they articulated as best they can, and this is the point of the awareness. The market is not aware of the intrinsic value of potash. Just because it was at $100 and now it's $130 at offer, so people have the impression that that is close to fair value. Obviously, it's not trading close to fair value because it's trading at 147, 148, because they're expecting a higher offer. So getting back to your question, so that $130, when you discount the equity investments, it's not even the core operations, it's not even the potash stuff that's on the ground. If you equity investments, $7.4 billion divided by the outstanding shares, that's about $25. 130 less 25 is essentially where the stock was trading.
Then that's why you're saying no premium here, basically.
Yes, and so BHP is playing this game of, okay, we lined up the credit, the financing for the transaction. This is somewhat similar in context to the InBev Anheuser-Busch situation. Well, there was only a $5 bump in that situation, which I covered. But in this situation, you have a big disparity, a variance, okay? So you have a $130 offer, the stock's trading almost at 150, and so my understanding, without specifically pointing to a dollar figure, is if you look at the growth profile of potash going forward, they're going to go from essentially $4 to $6 billion EBITDA next year to close to $10 billion in 2015. Okay, that is on the operations. That excludes.
So how high do you think ultimately an offer comes in? Cut to the chase for me.
Yeah. Well, Carol, it's hard for me. Everybody wants a number.
Right.
Okay, so I can't give you a number, but I'm telling you it's pretty significant to the 130 and potentially even more significant to where it's currently trading. Take a step back here. Just
got a few seconds left.
Okay, sure. BHP, what are they known for? Steel and iron ore. They're going to be #1 in potash. So if you're the Chinese, you're saying every year surcharges, you're charging me surcharges for the iron ore, 10%. 15%, 20%, they could monopolize the potash market. So the Chinese, and the Indians, the Indian market, emerging markets, they're going to rely on the food source. So if you believe in the food source, you believe in emerging markets, you believe in the population, these guys could control that. So you could have rival offers not only from Rio Tinto or RTP, Vale, but also the Chinese or the Asian players.
All right, Sachin Shah, Capstone Global Markets. Namaste.
Namaste. Namaste, Carol.